I have Arpit Beriwal of Motilal Oswal Financial Services. Great having both of you. Mayuresh, I'll come to you in just a minute. Arpit, let me come to you first on technicals. You know, a very good resilience seen over the last couple of days, 24,200 now really getting tested. How is it looking? And of course, it's now a slightly longer weekend. How does next week really shape up? Give us a sense.
Good afternoon to all. So from last few, we're seeing very interesting action where the headline indices are holding well, Nifty, Bank Nifty outperforming, whereas the broader market is little bit subdued. So first talking about Nifty, if we see the structure wise, very strong recovery was seen from 23,900 levels, and today also it's managed to hold about gains around 24,200 levels. So from a weekly perspective, now immediate basis 24,000 is the immediate support zone for the June monthly expiry. Whereas on the upside, once it closes above 24,200, we can see upside move towards 24,444. So overall, Nifty would be a buy and dip stance till it holds above 24,000 levels, spot levels. Having said that, apart from Nifty, if we see look at the Bank Nifty, this is the major driver that is driving the markets higher. So Bank Nifty is in strong uptrend. It gave a consolidation breakout of 58,000 after 7 days. Strong momentum today, holding its gains. So overall, Bank Nifty major support is around 57,777. On the upside, we can see towards 58,500, 59,000 positionally. So overall, Nifty, Bank Nifty both would be buy and dip stance for the overall next coming weeks perspective.
Okay. And will it be the private banks? Will it be the PSUs? Give us some texture, color around that, Arpit.
Definitely. Yesterday, you've seen a very classical pole and flag breakout in the private banks index chart. And if we see heavyweights such as ICICI Bank is leading from the front. So it would be a combination of private plus PSU. So on the private, ICICI Bank would be a preferred pick. So one of the strong counters, strong weekly breakout of 1360 levels, the stock can head towards 1420, 1450 positionally. So ICICI Bank would be a preferred pick within the private space. Whereas from the PSU space, SBI would be a preferred pick because SBI has been corrected in the last couple of months and good recovery was seen on the weekly time frame. So slowly, steadily, the risk reward is quite favorable. The stock can again head towards 1070, 1100 levels. So SBI and ICICI Bank would be a preferred pick within the banking space to play the momentum.
Okay. Let me bring on board Mayuresh as well. Mayuresh, how are you doing? It's been a while. How are you playing the markets at this point?
Hey, Harish, afternoon. No, so I think markets probably seem to have come back very, very strongly. And ever since I think the MOU that has been signed and and the expectations in terms of a complete resolution over the next few weeks, in the next couple of months, the markets will now look forward to how earnings will play out. Obviously, I think the expectations largely getting built out for Q1, that it's going to be a washout quarter because of supply chain issues, because of input cost inflation, and because of some element of demand probably coming off. I think all those factors might probably play across sectors as we enter Q1. And then there is the other risk in terms of how El Nino will probably play out in terms of the second quarter and how much of a ripple effect will that have in terms of the annualized numbers, specifically for consumer-facing sectors. But it's too premature in terms of how El Nino will play out. Even if we are very, very close to those long period averages, I think we will be better off on that front. However, with the West Asian crisis coming to an end, my own sense is that the earnings outlook, which probably looked very, very hazy a few weeks back, I think there is some element of hope in terms of a strong earnings recovery as we head into the second half of this year. And therefore, I think a few of the sectors that might still keep on outperforming might be the pharma pack, in our opinion, might be domestic engineering companies, power and utility as a space overall might also continue doing well. FMCG, a few of the consumer discretionaries might actually consolidate in our opinion. Therefore, I think markets are now looking fine in our opinion.
Okay. Mayuresh, again, this debate with regard to private versus PSU banks. I didn't hear financials when you spoke about sectors you're positive about. You spoke about pharma and the like. How is it that you're playing the financials? Open-ended question. Private versus PSU, what do you prefer and topics?
Well, Harsh, honestly, I think we had a few of the PSU banks in our portfolios, and they have largely achieved our targets. So I think we have booked out in a few of them because we made a decent amount over the last few weeks and months. Having said that, as we stand right now, I think the entire perspective in terms of how deposit accretion is going to play out, specifically for the large private sector banks, is going to be extremely critical. I think that is the one main parameter that I'll be watching across, specifically for the large private sector universe. Having said that, I think the expectation largely in terms of net interest income growth should largely be muted as we head into Q1. What probably happens in terms of the risk-weighted assets is also to be watched out for when it comes to the large private sector space. And therefore, I think in terms of NIMs, actually just contracting a tiny bit as we head into Q1. And with what is happening in terms of central banks across the globe, ECB is under 25 basis hike. Large expectations of the Fed not hiking this year probably seems to be the base case scenario in the markets as we speak at this juncture. And therefore, with inflation not expected to probably pick up meaningfully as the West Asian crisis comes to an end, rate hikes in India probably might not also happen as we speak. However, I think the base growth in terms of our advances growth might happen in a substantial manner, will still be a little bit on the back foot, in our opinion. And therefore, our own sense is that we have played out the PSU banks. Large private sector banks is something that we'll watch out for the Q1 numbers. But the mid-private sector space, selectively, I think still might do very, very well, in our opinion, because they've got the flexibility, both in terms of maneuvering their balance sheet, as well as ensuring that all the tight caps that are probably kept in terms of the risk management tools onto their balance sheet are taken care as well. So I think Karur Vysya Bank is an old favorite of mine when it probably comes to that space. And even something like a Karnataka Bank or City Union Bank, something that we've kept on our watch list.
Okay, we'll talk a little bit more about banks, but on the other side of this break, you want to stay with us. There's been a bit of a cool off on the index as well, around 50 odd point cool off very, very quickly over the last few minutes. We'll take a view from Arpit on the other side. Stay with us. Welcome back. Some choppy moves on the index visible there. Arpit, what explains it? Is it expiry day move? Is it otherwise?
So generally, if we see from last couple of days, this has been the pattern. If we see just couple of days back on the Nifty weekly expiry, we have seen a very sharp momentum on the downside, and then yesterday again we've seen a sharp recovery. So generally, index tends to be consolidated, volatile within, especially on the expiry day, and being the monthly expiry, so definitely volatility would be there. Having said that, India VIX is still below 13.5, 14 levels, so the comfort is there. But yeah, definitely some swings can be there because the broader market is underperforming. We have seen some cooler from the higher levels in Nifty also, but till the time 24,000, 24,050 level is intact, the overall bias would be positive. At the same time, upside 24,200 closing base is the key level to watch out for. Once it closes above that, we can see one way move towards 24,444.
Okay, I'll come back to Mayuresh. Mayuresh, you were speaking about some of the smaller, the mid-sized kind of banks. That's where probably the opportunity lies. I want to point out one in particular, which has been in focus from the morning. One is, of course, Bandhan Bank. The stock is down 5 odd %. I wonder what the view there is. But the other one is CSB Bank, with possible reports suggesting that Fairfax may absolutely exit the bank. Talk to us about the likelihood of that, and if at all it were likely, does it change the story per se? How should one look at the stock and the story?
From a structural story perspective, I think nothing changes, right? Though I think with an ownership change, obviously, I think it will have the price impact being felt onto the stock. However, our own sense is that in terms of consistency of numbers that are probably being reported or have been reported within this mid-cap private banking universe, Karur Vysya Bank has probably reported one of the strongest set of numbers very, very consistently over the last few quarters. And therefore, in our opinion, I think in terms of or the periodicity of volatility, the expectations in terms of riding through tough periods, I think the bank has probably done that very, very successfully. Again, I think very, very diversified in terms of their advance book, very strong deposit franchise as well, and diversified in terms of ensuring that the risk assets are well spread out, not creating or causing or expected to cause any significant dent when it comes to probably any kind of asset quality pressures onto the balance sheet. And therefore, I think a mix of all these factors put together help them report healthy NIMs, ROAs, and ROEs. And therefore, probably your due for analysis in terms of how the bank might be structured 2 years, 3 years down the line, it still looks very, very healthy in my opinion. So again, from a City Union Bank perspective, I think nothing really changes, or from a CSB Bank perspective, sorry, nothing really changes. But structurally, I think Karur Vysya Bank within the midcap private banks, which is structurally well placed and well played out in terms of how earnings growth has been. So,
Okay, point taken. And Mayuresh, I wonder from Pharma, how do you pick the winners? Because I was just going through what, for example, a Parag Parikh Flexi Cap has sold recently. It's Cipla. And then we've seen a run up in the stock price. So, I mean, of course, there can be reasons why, but that's one mutual fund which is a favorite, right, for plenty of us tracking the markets. And therefore, how should one play Pharma? Because the environment is that where there's certainty, there's no valuation comfort, and where there's valuation comfort, there isn't enough certainty.
well, absolutely well put out. But again, I think two things. One, I think within the space itself, I think we do like the CDMO stroke CSM players. We liked Laurus Labs, and then I think the targets have been achieved largely on that one, and therefore we put out on that in our model portfolios a few weeks back. We continue holding on to a stock, Life, where our belief is that the entire CDMO story is still expected to play out quite meaningfully in terms of capacities being added, so on and so forth. A couple of names that we probably got in our swing books as well. We've got Aether Industries, which probably also has a good mix in terms of the customized specialty play, which contributes 42%, CDMO contributes 9% in terms of their overall revenues. And therefore, I think Aether Industries probably might do well in terms of the profit numbers, in terms of the EBITDA margins, and then expectations in terms of this growth actually continuing with more product launches, share mix actually probably improving a tad bit as we head and exit in 2028. So within Pharma, again, I think CDMO stroke CSM players very strongly placed. The business momentum is on their side, very strong margin profile, and therefore that will reflect very, very positively in terms of the free cash flows and the earnings that we probably report, as well as on our ratings and rankings that we have.
How are you looking at the entire Pharma pack, and any preferred picks over there?
If you see overall Pharma index has been in a very strong uptrend, and if you see the monthly setup, it has given a range breakout after almost 2 years. So overall Pharma, we have to create kind of a basket where we can select 3 to 4 counters, a Pharma as well as the hospital stocks. So a healthcare and Pharma could be in combination, and couple of bets that are really strong on the charts from the Pharma index would be first would be for Laurus Lab. So if you see Laurus Lab is in clean uptrend on the monthly time frame, good rally we have seen from 1000 levels to almost 1400, but still the leg is there towards 1600, 1800 levels. The first preferred pick will be Laurus Lab. That looks very strong. Apart from that, Apollo Hospital from the healthcare hospital space looks very strong. So classical range breakout on the monthly time frame about 8000 levels. Slowly, steadily, the stock is heading higher, and we can see good 9000, 9500 plus levels eventually. Apart from this, if we see a lot of mid-cap space within the hospitals also looks good. So if we see one of the counter that is also from the cash space, that is Krishna Medical. So if we see setup-wise monthly scale, a very strong setup, and slowly, steadily, the stock can move higher. So within the Pharma space, Laurus Lab, Apollo Hospital, and Krishna Medical looks very strong. This would be a 3 preferred picks within the Pharma space, where you can see good outperformance going forward.
And Mayuresh, do you prefer Pharma? Do you prefer healthcare? Is that the better play? Is that where probably there is more certainty with regard to growth and valuations not as elevated maybe?
So I think a mix of both, Harsh, to be honest. And therefore within Pharma, I've just given you the preferences that we find where the rankings and the earnings strength probably might hold up. Within healthcare, Max and Apollo is something that we continue holding in our global portfolios. Our own sense is that the kind of growth dynamics that we probably see for the hospital industry as a whole, the expectations in terms of new bed additions that are expected to happen specifically within the organized players. They're having a very asset-light strategy in doing that, which ensures 2 things. One, I think they take care in terms of the local facilities, which have got a lot of goodwill in the local areas, districts, cities itself, which can augment the kind of additional offerings that they can probably get in terms of therapeutic offerings that they need to give to the end patients. And therefore, I think that can add as a huge value add. The second element in terms of having asset-light approach is that too much of leverage is not built up on the balance sheet. And therefore, if you probably look at the strong clusters, example of being Chennai, Hyderabad, Andhra Pradesh, I think the average revenue per operating bed stays extremely strong and elevated because organized market players are expanding quite meaningfully in tier 2, tier 3 towns as well. I think they're gaining a significant share in terms of the unorganized market. A couple of risk factors for your players. Any amount of capping that can or may come through as far as the government or the regulator is concerned might actually lead to some element of a cap in terms of how their margins might peak out. And the second element is in terms of insurance coverage itself. I think as the net of your coverage of insurance policyholders increases across the length of the country, it's to be far better and easier for them to probably procure these facilities at a far reasonable cost, which is not out of pocket, which does not go out of their pocket, but largely gets covered by the insurance policies as well. So those are the couple of risk factors. But I think max and Apollo is something that will continue to benefit.
Okay, and last off, Arpit, this move in auto, talk to us about what's driving that according to you and sustainable. Your top picks, if at all, sustainable.
So if you see, auto index was quite dull till now, and today, after a very long time, we have seen good up move across the auto index. So I think overall, a view from the auto index perspective would be a range one counter within the index perspective. But important part is that selective outperformers are there within the auto index, so it will be more of a stock specific approach. And within that, if you look at the chart structure of first would be from the auto space, would be auto ancillary looks very strong, and Bharat Forge would be a preferred pick in that space. So a very strong uptrend, a monthly setup, strong weekly, a consolidation breakout and holding well. So Bharat Forge will be a first preferred pick from the auto ancillary space. The stock looks good and can head towards 2200, 2250 levels positionally. So Bharat Forge will be a first preferred pick. Second would be from the two-wheeler space. That would be Eicher Motors. So Eicher Motor also, it was sideways, but today after a very long time we have seen good momentum. So from a risk road perspective, it is near its base major support zone. Slowly steady the stock can head towards 8,200 levels. So Eicher and Bharat Forge would be a preferred pick within the auto index, whereas the other stocks are likely to be range.
Okay. All right. And, a couple of quick thoughts. Arpit, in terms of top picks, what are those in terms of stocks, trades?
But definitely, as we're discussing, you have to go with the sector-based approach. And if you see, financial sector is one of the most outperforming sectors. So first sector would be from the financial space. And within that, three picks would be a preferred pick. First would be from the private bank, ICICI Bank. Second from the PSU space would be SBI, and third from the NBFC would be Bajaj Finance. So this would be three stocks from the financial space that looks very strong for in near term. Apart from the auto, we have already discussed Bharat Forge, and along with that, if you see the defense sector is consolidating. Some cool off is seen, but if you see the structural trend, it is still very positive. And when the defense sector, BEL, Bharat Electronics, looks relatively better at its trading near its. So I think couple of ideas that are there from this space would be financials, auto, defense, and the fourth would be the pharma space. Pharma space are preferred would be Laurus Labs and Apollo Hospitals. So we have to go from a sector specific approach and pick up the outperforming counter to play the next move going forward.
Okay. Mayuresh, your one top pick over the next 12 months, what would it be?
I think auto anchors, Shriram Pistons is something that we like. Our own sense is that there is a huge market for Shriram Pistons, specifically the areas of piston assemblies that they work out on. The organized players are quite few, and the unorganized market is pretty large. The technological collaborations that they probably got ensure that they have a very healthy growth in terms of all the areas that I mentioned, leading to EBITDA margin in excess of 21%. And therefore, our own sense is that auto ancillary as a fact might particularly well. Shriram Pistons probably one of our topics.
Engaging conversation. Thank you so much, Mayuresh, as well as Arpit. Plenty of takeaways, hopefully, for all of the viewers to take home. Thanks so much for joining us this afternoon, giving us that perspective. We'll still in a very short break. Come back. Plenty to talk about. We'll get you some stocks which are buzzing today. We'll speak about some of those. We'll have a fresh panel of guests come in and we'll discuss some more. Footwear stocks buzzing. Realty is buzzing last couple of days. We'll talk about some of those sectors. Auto, we haven't really fully covered either. We'll try and speak about some of those angles of the market on the other side. Stay with us.